thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come something from like the economic calendar, sometimes it could come from headline news or geopolitical combination. But it can really get confusing out there when the market sentiment changes and you got good news and now bad news, and you may not understand what's going on here, why the market's reacting the way it is when we got good news, for example. So we just try to get into giving you the mindset of what's on investors' minds, why they're acting the way they are acting, and kind of help you along with them where the markets are going, and help you figure out if you're looking to refinance or purchase. You might be watching rates, and hopefully this will give you information as to make a decision, informed decision for yourself. A little bit about myself is I am a loan officer. I work with a national lender. We lend in all 50 states. We'd love to earn your business. So if you're looking to refinance or purchase, we'd love to hear from you. But more than that, we'd like to be a resource for you folks. So if you guys got questions about anything, so please feel free to reach out. We're here to help you guys out. So without further ado, we'll start off with the economic calendar. We got just one item here, and that is the factory orders for the month of May. This is month over month. So the April's numbers actually revised higher from 0.3% to 0.7%, and forecast for the month of May was a 0.5%, and actually came in well above that to 1.6%. So factories was looking really good for April and May. This is something, of course, we'll keep our eyes on because manufacturing, we've been seeing other data showing manufacturing dipping quite a bit. So this is something we'll keep our eyes on. But very good numbers today for factory orders. This week we will get the jobs data. There will be one caveat that changed, and that is the ADP. We usually get that the Wednesday, and that will kind of usually start the week. But they are in the process of retooling their report, so they are hoping to aim for around August to come out with their report, so that we will be without any ADP reports for the time being until they decide to they're finished retooling their reports and announce those. So Thursday will be the very beginning, and that will be the initial jobless claims that we get every Thursday. And then Friday will be with the Bureau of Labor Statistics, or BLS, with the unemployment as well as the non-farm payrolls. Those will be the big ones this week. Again, so let's look here at the bond market today. Bond market is up 28 basis points. It's above its 25-day moving average and now challenging the 50-day moving average, which is good news for us. Here's kind of how it looked like today. You'll see some volatility. We were shot upwards, kind of came down a little bit, shot up, and kind of been, for the most part, more sideways moment for most of the afternoon here. And why is this? Well, a lot of it is market concern. Investors are right now, what's on their mind is recessions. They think that we're going to go into recession, and some feel that we are in a recession currently. So we are starting to see, again, other data coming out with as I had mentioned, the manufacturing has been dipping. We are starting to see a little bit more on the job losses, so people more, as the Fed will start hiking more rates, we'll be seeing a lot more companies probably tighten the belt a little bit and probably have incur more job losses out there. So that will be something that will be inevitable, most likely, and that will, of course, lead us towards that recession that they are so worried, that they are very concerned about. So, speaking forward, also today, we got not only concerns about recessions, but we also saw some unusual activities where oil dropped because of concerns of inflation. Oil dropped to under $100 today, which is good news for us at the pumps. And then also the dollar. The dollar got really strong against the euro. I don't think I've ever seen the dollar stronger than the euro, and now it's like a dollar. It's like a 1.03 euros to $1 now. So now it's the opposite. Usually it's about $1.30 equals to €1. Now it's like the other way around. So that is hitting the markets as well, and they're reacting. So you've got kind of a mixed data or mixed results going on with the indexes in the stock market, and we're kind of benefiting for the most part from that. And a lot of that money in both those investment dollars are flying over into bonds for flight to safety. We're seeing yields drop a bit more. We're below its 50-day moving average and now approaching 100-day moving average. We're just at 2.82 now on the 10-year yields. And of course, what does all this mean? Well, we're seeing a little bit of an improvement in our mortgage rates today, so that's obviously the good news. We probably see about 1/8% in the rate improvement there from this. All right, so that's pretty much the wrap, but we'll touch on one last thing here, and that will be the average rate for conforming loan limits. This is based on Friday's results, and they do have points built into them, which is why they aren't in 1/8 increments. So the 15-year is at 4.85 now. They dipped below the 5% mark, and 30 years now at 5.5%. So we are, as you can see, we saw some improvements. The 15-year was above 5%, and at one point, 30-year was even above 6%. And for the past 2 weeks, we've been seeing some improvement over that, steadily improving. All right, folks. Again, we're here for you guys. If you guys have any questions, if you guys need rate quote, if you guys got any questions, we're here to help you guys out. Please feel free to reach out. If you guys like these videos, please help us out and smash that like button and share. We greatly appreciate if you can help us out and grow the channel here. We do appreciate you folks. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys in tomorrow's video. Bye-bye.